Assalamualaikum, everyone. Today is August 29th. Welcome to Wall Street to Bay Street, Sunday Chai with Sharia Portfolio Canada. My name is Nadeem Mia.
My name is Shamil. Get your chai ready and let's get into the swing of things. So Nadeem, we had some comments from, the U.S. Federal Reserve Chairman Jerome Powell this week. So why don't you kind of start us out by telling us what happened over there?
Yeah, sure. So for several days, all the market could do was just focus on this Jackson Hole speech. It's an annual symposium that the Federal Reserve makes its speech, and so I mean, the question really becomes, was he signaling any type of tapering, and just get some views as far as tapering and interest rates. And to kind of sum it up, basically, tapering looks like it will be happening this year. That's what Powell alluded to. But he really just kind of hinted to the fact that the U.S. economy isn't necessarily out of the woods, and interest rate increase isn't necessarily a given or a guaranteed. Now, mind you, this speech came really with some other U.S. Federal Reserve presidents kind of making some hawkish comments. Specifically, there was the president of Pennsylvania who came out and he kind of alluded to the fact that he was on CNBC, gave an interview saying that it's not a given that that inflation is necessarily transitory. It could be, not transitory. So there were some hawkish comments, from some of the other presidents out there, federal presidents out there. But Powell, I guess you could say, was not as hawkish, or he didn't make any hawkish comments per se. And so the market did get a little bit of a bounce, from his speech. It actually went up. The Dow was up about 200 points, after his speech got released.
Awesome. And kind of shifting from that, we've seen a lot of current events, from Afghanistan recently. So can you maybe kind of walk us through, what kind of effects that could have on the short-term and the long-term effects of the market?
Yeah, sure. First and foremost, our thoughts and prayers are, with the people of Afghanistan. We pray that, Allah makes their struggle easier and brings them peace. Obviously, it's been 20 years of conflict in that region. So again, we pray that, Afghanistan and the people of Afghanistan, find some peace and safety during this time. Now, having said that, as it pertains to the market, short term, Afghanistan is not necessarily an economic global powerhouse or a trading partner. Unfortunately, so from that standpoint, this is not a country that when something disruptive happened, it impacted global markets, it impacted commodity markets or anything of that sort. This was more obviously a geopolitical event as opposed to a market event. Now, we could say that while this wasn't necessarily a good event for U.S. politics in general, could this hurt President Biden's popularity? Possibly. And what does that mean? That could mean that that all of a sudden his honeymoon period is over. His agenda, that whatever he has, he might, he not being as popular could have an impact as far as how much impact he can actually put his agenda through Washington, right? So those could be some of the casualties of Afghanistan as it pertains to Washington and vis-a-vis the market. The other thing I could say is the longer term, however, I mean, a major importer or exporter of any given commodity or anything of that sort. However, there was an internal memo, that was reported in the New York Times, in about 2010, I believe, where the Pentagon said that, they call Saudi Arabia they call Afghanistan the Saudi Arabia of lithium. And lithium is obviously, getting a lot of press here because lithium is used in electronic vehicles. But that's more of a longer term thing, right? Is that if Afghanistan does have the potential to, it does have the potential of anywhere from 1 to 3 trillion in terms of reserve mineral deposits. Again, this was reported by, the Pentagon report. And, that's obviously a big thing. And now these are just reserves. They're untapped. The country, obviously, if it gets developed and it's able to develop these reserves and export them. That can obviously help the country. But as it sits right now, longer term, the change in government that we're seeing right now, obviously there's a turbulent time, but longer term, if the government can, put itself in a position where it can develop these resources and actually, benefit the country. That's the only thing that I can say that can impact the market long term, is that if Afghanistan is able to become some type of of an exporter of some of these material deposits.
Perfect. And kind of shifting gears here back to what's going on in Canada. The elections are obviously coming up, and one of the questions that I've been getting a lot is, does the party that wins the election, is that going to have an effect on how the markets do based on who wins? Can you maybe shed some light on that?
Sure. I mean, so a couple of things here. I mean, there's two things. There's obviously fiscal policy and monetary policy. Monetary policy is basically governed mostly by central banks. Like here in Canada, Bank of Canada is the kind of the conductor of monetary policy. Fiscal policy is more government, and that involves more things such as taxes, spending by the government, whereas monetary policy is more about the money supply, interest rates, and so the stock market really kind of pays more attention to that when it comes to performance. I guess there's a lot of empirical evidence, especially in the U.S., that points to the fact that if the central banks are not are loose, markets tend to do well, and vice versa. However, when it comes to fiscal policy in terms of government, yes, there could be a little bit of a push in the needle, but I mean, there's no real, specifically to Canada, there's no empirical evidence that points to the fact that this government is better than another. You can't, and the other else, when you take a look at the Toronto stock market, for example, most of the companies there are actually net exporters. In other words, they do depend more on either global commodity prices such as oil and gold and minerals, whatever, because we do have a lot of companies that are in that space, or they're exporting mainly outside of Canada, like a company, for example, like Shopify, where over 95% of the business is not coming from Canada.
Awesome. And one question that came up for me was, there's been some talk about, the capital tax, an increase in the capital gains tax. If that were to happen, do you think that would have a positive or negative impact on the market?
Well, generally speaking, I would say that, any increase in capital obviously means that you're taking less money, when the tax man takes this money. So, so it is a negative contributor to wealth, I guess, in general. So you could make the argument that, it's not necessarily a positive thing at the end of the day. The other thing that you might want to add is, if there's a capital gains tax, markets might not be as active anymore, in the sense that you might have more investors that are inclined to not sell because they don't want to incur the capital gain. So that could maybe reduce some of the liquidity in the market. And obviously markets like more liquidity, and so in general, what I would say is that it's not a good thing, to have any, especially when it comes to capital gains tax, any type of increase, on that front.
Yeah, I guess we'll just have to see and look out for any developments on that end. And yeah, that's pretty much all the topics we had today. So, once again, thank you for coming out and joining us. And if you ever do have any questions, feel free to put them in the comment section below. And for myself and Nadim, go see you next week.
Thank you. Assalamu alaikum.
Nadim Mian, Portfolio Manager, registered as an advising representative, and Shamil Devji, Financial Advisor, registered as a dealing representative with Sharia Portfolio Canada Inc., a portfolio manager registered in the provinces of Ontario, British Columbia, and Alberta. Their opinions and statements expressed in this show are their personal opinions and do not necessarily reflect those of Sharia Portfolio. They are effective as of the date of this broadcast only and are subject to change. This discussion is for general information purposes only and is not investment advice.